Hi, welcome to Go Permissionless. I'm Simon Elias. I'm your host for today. We're on a mission creating world-class crypto-native information for entrepreneurs, traditional finance, and property investors. And on today's show, we'll be discussing future-proofing your business by adding Bitcoin to your balance sheets and having a general discussion on Bitcoin news at the same time. But on our show today, I'm pleased to have two pioneering leaders in the space. We've got Stephan Livera, Head of Education at Swan Bitcoin, and we also have Wankum, Investments and International Operations from One Vest Developments. Let's do it.
So much for coming on, appreciate it. Before we start, I just wanted to tell you a little bit about me so you know my background and why I wanted you guys on, essentially. So I started an enterprise app agency back in 2011 and sold this in 2018. From here, I went on to build various SaaS companies and exited those. At the same time, I wanted to kind of boost my asset allocation and launched Venom Property, which essentially is a blend of buy-to-let and serviced accommodation businesses or properties. And then from here, I kind of got excited about Bitcoin and started my Bitcoin journey back in 2020, where I saw a huge value in adding Bitcoin to my balance sheets across two of my businesses. So it's a kind of little bit an overview and hopefully a small picture about myself. But Stephan, please tell us a little bit about yourself and how Swan Digital is helping investors and businesses invest into Bitcoin, please.
Yeah, so my name's Stephan Livera. I host Stephan Livera podcast. It's a show about Bitcoin economics, and I also work as head of education at Swan Bitcoin. So Swan Bitcoin, we have a range of basically services to help people buying Bitcoin. We have a range of things. So we have Swan Vault for people who want to self-custody. We help people at the high net worth level, people at the everyday level, businesses, and just a range of different products. We have an IRA or an IRA product for people in the US. It's like retirement accounts. And so, yeah, essentially the company's known for helping people to buy Bitcoin and also to learn about Bitcoin, because we have a lot of media and content and newsletters and shows that help people learn about Bitcoin.
Fantastic. Many thanks, Stephan. I appreciate that. Leon, please tell us a little bit about yourself and your business and why you're an advocate for property investors investing into Bitcoin and what really initially sparked your interest into Bitcoin.
So I learned about Bitcoin in university, and then I studied it from the perspective of the Austrian school. And after university, I went into real estate development, and that really helped me to understand how broken our monetary system is. It also helped me to understand the potential of Bitcoin as a superior store of value to real estate. And I'm happy to go into details why Bitcoin is a pure store of value in this conversation going forward.
Fantastic. Thanks, guys. And I say, welcome to the show. Much appreciated. Something that popped up on X recently, one of my first questions that I wanted to pose to you guys, which I thought was quite interesting. I'll just bring it up. I can share my screen. Yeah, it was basically about Jack Dorsey. Really interesting. Posted on X about Block, his company. He's DCA, dollar cost averaging Bitcoin every month into Bitcoin for his business, and he's posted a sheet on how businesses can do that, which I thought was really interesting. It seems more enterprises are following Mr. Saylor's position. What's your thoughts on this, and is that the case from you guys? Stephan, do you want to go first?
So, of course, Michael Saylor is famous for being one of the first to really very loudly and publicly do this. And it's kind of surprising that there haven't been that many other big companies doing it yet. Now, the main reason I've heard is that MicroStrategy and Michael Saylor are sort of unique in that way, because he is a long-time founder of a big tech company, and he has a very large level of influence in terms of shareholders and the rights, the voting rights. So I think that is probably the main reason why we haven't seen a lot of the other, let's say, big public companies go and do this. Now, of course, there are, as you said, Jack Dorsey and Block. There is Tether is buying a lot of Bitcoin. Obviously, Bitcoin companies and crypto companies will do this too. But in terms of, let's say, public, non-Bitcoin or crypto companies, it's basically MicroStrategy in the US in terms of big public ones. Of course, there are a lot of other smaller companies doing this, and you know, maybe on one side you could say, hey, they don't necessarily want to, they're not necessarily out there trying to tell everybody else what they're doing. But I think it's also just a unique factor that for these large companies, it's, you know, it's like you're trying to turn a big cruise ship here, and even if leaders of some of these companies are personally holding Bitcoin, which is probably true, right? Like, it's probably true that many of these big tech companies will personally hold some Bitcoin. It's just that they haven't gone and taken that step to do that in the company name yet, because for various reasons, maybe that, you know, we're not there yet in terms of the understanding in the market, the, let's say, the board members of that company, the C-level of that company, the expectation that customers and shareholders have of that company. They may see that like, oh, we're not ready for that yet. But I think that is changing over time, especially now with all the new conversation that's been spurred with Bitcoin ETFs and so on. Yeah. More and more people are starting to buy Bitcoin even outside of the ETF, which is interesting.
Well, I'm hearing that now soon, actually. I think Europe's going to be the next on the spot ETF, because obviously we had the US, we had Asia, and I think Europe is going to be coming next, which means it's going to be huge liquidity. So I think that's going to start, you know, I guess, traversing people's mindsets from an enterprise level anyway. Leon, what's your thoughts on that?
Yeah, so I agree with everything that Stephen just said. And just to give some experience personally, because we are a real estate company that's not publicly listed, but that it's incorporating Bitcoin into our business strategy, but it's taking a long time. And when I initially started to think about buying Bitcoin, it was really as a hedge against real estate losing the monetary premium that sits in it, because fiat currency is a bad store of value. Because what happens is, as money is being inflated, market participants are forced to invest to save their purchasing power. And the number one store of value that people invest in is real estate. So as Bitcoin comes in as a superior store of value, it's totally scarce. It's easier and cheaper to maintain. It's mobile, which is very important in a world that's increasingly going through conflict. And it's highly liquid, right? Real estate is a very illiquid asset, which is bad for the economy overall. Once I proposed buying Bitcoin to our partners, they initially liked the idea, but then actually doing it and buying Bitcoin, not just as a hedge against what I described, but also using it to protect, for example, cash flow from inflation. Because for real estate investors and people that own real estate, Bitcoin is a great asset to funnel your cash flow into, because it protects it from monetary inflation. And it also helps you to build maintenance reserves to be able to maintain your property going forward. But to actually do that has taken us 3 years, right? And we are a company with myself being the youngest partner, who is a Bitcoin advocate, and also the other partners, they own Bitcoin personally, but there's a mental switch that needs to happen. It takes a very, very long time. And that's why I also respect Michael Saylor, because he just did it. And he did it within such a short period of time, which is important, because Bitcoin monetizes so fast that you need to make very fast decisions and to be able to benefit from that.
Do you think there's drawback though? Are you saying people are getting worried from an enterprise level for investment? So people, I guess it's that stepping stone to go, because I mean, if I just give my example, I'm a small property investor. I've got a small portfolio, as I mentioned earlier on, buy-to-let and serviced accommodation. But for me, it was actually the return of investment, the ROI from the portfolio wasn't really doing much. And I was personally investing into Bitcoin. And then I realized, actually, hold on a minute, I've got some surplus cash. I can move this out of my business into Bitcoin under a business level. But then for me, it was a bit of a struggle, because one, the protection, as in cold storage, there comes an element of trust and who's responsible for looking after the keys. How do we support the keys? And I've now started to go on to looking into multi-sig, which we'll talk about a bit later. But do you find companies are kind of stopping, like you said, at a certain point and going, oh, it's a bit too risky for me at the moment. How do I do this? And I guess that's kind of where Swan Digital comes in as well. We can kind of help out.
Yeah,
you know?
Sorry, Swan Bitcoin, not Swan Digital. Yeah, but yeah.
Swan
So
Bitcoin,
but I think it's now I don't personally work in the business, service line. Dante Cook is our managing director there, but I think it's the concern you're sharing though is not unusual. Put it this way. There's a lot of different hurdles that a company may have to face, whether that's thinking about the accounting for Bitcoin, thinking about the legal and regulatory aspect, thinking about the custody, thinking about, you know, what kind of how much of a position are you going to take, and how much are you going to add to that position? Are you going to reduce from that position? There's all kinds of things that depending on the full gamut of companies, right? Whether you're a small business all the way up to big public companies or governments even, they all have to think through some of these considerations. And as you said, the custody one is a common, let's say, it's something they have to think about. So generally speaking, a lot of customers are sort of, firstly, they're thinking, well, can I self-custody this? Maybe I legally cannot. Or the other case is, if we're going to use a custodian, are they a qualified custodian, right? That's the term, at least in the American market. I live in Dubai, but just in terms of what, people are generally, common questions, let's say. Yeah. And so typically, I would say a lot of businesses, they might just start with custodying with, the platform who they're purchasing from. So for example, with us, with Swan, we have partners in the background who are helping. And so Swan is helping facilitate for those customers. And over time, once they're ready, that's when, they can start using self-custody products, whether that is, Swan Vault, which is our 2 of 3 multi-signature collaborative custody product, or whether they want to, withdraw and do their own setup. I mean, that's really a conversation between, let's say our Swan rep for that customer and, that customer, what are they comfortable with? What level of control do they want? And I guess they might also have to think of it in terms of how do they integrate it with their own business, right? Like, are they, put it this way, if you're just hodling, that's relatively simple, right? I mean, they're still accounting for that and so on. But if you are actually using it as a business and actually earning and spending Bitcoin, now that's another level of complexity. Now you might have to start thinking about, well, okay, how do I plug that in with my accounting and my other, let's say, my ERP software? So those are a few examples of the considerations you might have.
Software, like trying to get connections, and there's obviously policy and compliance to go through. That's quite a big thing for a large company, isn't it, to get to that point, I guess.
Right. Yeah. So yeah, at the end of the day, I mean, just don't miss out, right? And I was just commenting on this just the other day, I think maybe 1 or 2 days ago. I was saying, look, with it just about a week ago, Bitcoin price was around $61,000 per Bitcoin. And then as I tweeted that, it was kind of pumping from like 68,000 up to about 70,000, right? So in the space of about a week, we had gone from 0.06 million up to 0.07 million. And there are people agonizing about, oh, what's the right time to enter? How do I? No, just don't agonize.
Just get in.
Don't try to be perfect. Just try to get started and acknowledge that, yes, you'll make mistakes along the way, but so be it, right? We all make mistakes. The best way is to just get in there and learn. And obviously, don't go like crazy, but just, be reasonable about it and move at a reasonable pace to get started with accumulating Bitcoin, because you really can miss out, especially depending on the time of the cycle that we're in.
I think it's dipping your toe in the water. You're absolutely right. But I think there's that misconception still. People have got that stocks and shares kind of thought process. I must get a dip and then buy in. And I guess maybe because you've got massive swings on Bitcoin, people have got that mental thought pattern of, I've got to let it drop 20, 30% and then get in again. And my view is, and I'm sure you're probably on the same page, it's just get in, and you need to get your Bitcoin sorted out, as soon as possible. That's really interesting. Just out of interest, when do you think mass adoption to enterprise level will happen? Are we years away, or are we like a year away?
I don't know if I have an intelligent, kind of insight to give you here. I'm guessing, right? If I had to guess, I think over the next, my guess, I think over the next 12 to 18 months, we're going to start seeing a really, like, it will obviously number go up, right? Like, number go up is the biggest kind of marketing factor. Of course, many of us talk about the ideas of freedom, the philosophy, and all of these things. But, no matter how many podcasts we do or articles we write or books we write or whatever, NGU is what brings people in. Now, of course, that's not the only factor, but I think that NGU factor is what drives people to just, instead of just be sort of curious about Bitcoin, once they start seeing the number run up, they're like, oh shit, I better go in and actually buy some, right? And I'm sure we're all human, right? We sort of we naturally chase momentum. We are naturally momentum chasing, and so that can cause people to, you know, over invest at the top and then sell on the way down, right? And when obviously, if you're thinking about the fundamentals of investing, it's buy low, sell high, but our natural human inclination is almost to do the opposite. And that's why, you know, to be a good investor requires this kind of emotional control to not get sucked in to those times.
Okay, that's great.
Simon,
That's
I'd like to add something, Stephen, to what you said. First of all, I fundamentally
Stephan, just for the record.
Yeah, Stephan, not Stephen. Yeah, thanks.
Stephan, yes.
Yeah.
And so I think it's a fallacy to believe that you can time the market, and it's a fallacy that is fundamental to the human existence, and it's also what led to central planning. So the idea to be able to plan is fundamentally flawed. You can't plan because the future is uncertain. So the question is, how can the entrepreneur, how can the investor deal with uncertainty? And I do believe that Bitcoin is the best asset that helps to deal with uncertainty because it can't be inflated and it can't be manipulated, right? So I think you just need to make the mental step to understand that planning, generally speaking, centrally planning, or being able to time the market is a fallacy, and it does not work. And once you do that, you know, the volatility of Bitcoin becomes less important.
Interesting. That's interesting. Yeah, I'd have so many people that I've spoken to that are property investors that just kind of had that argument with me. But yeah, that's great. Thanks, guys. Moving on. I saw a recent article which got published in the UK by London Loves Business. Great news network, basically. It's a news network for property, but also business. They published this, which I thought was interesting. It says basically more mortgage hikes coming in the UK, and I guess we tend to follow US. What's your view on this? And will this push more Bitcoin adoption in the future? Does it make property a secondary investment opportunity, do you believe?
You can go first.
Yeah. I mean, you see, talking about interest rates and why real estate has become so important. I'm going to answer your question now, going a bit back in history, but I think it's important for your listeners to understand, because if you look at real estate throughout time, there have always been times when land and real estate and times of inflating currencies, also in Rome. So in Rome, there was a currency called the aureus, which was a gold-backed currency. And at some point, people started to inflate it with less precious metals. And once that happened, land became a bit more expensive. But what we've seen since 1971, when Nixon announced that there was no fixed convertibility from the dollar into gold, real estate has grown almost on par with the growth of the money supply. And since 1981, we basically had falling interest rates. So actually, real estate has not grown in value. It's the currency that has been debased. It's only the nominal value of real estate that has grown. So once interest rates went back up, which they did in 2022, real estate prices went down, which really showed that the nominal value was inflated, but the demand for real estate was only based on the need to invest currency. So mortgage rates are very, very important for real estate investment because there's a high interest rate sensitivity. If interest rates stay up, I believe real estate prices will continue to go down because the cost of borrowing goes up unless people are able to afford real estate. Obviously, here again, Bitcoin works a bit differently because, which is interesting, now for the first time, you can see Bitcoin thrives even a high interest rate environment because there was like an unknown. Since Bitcoin exists, since 2009, interest rates basically, in response to the great financial crisis we had in 2008, went down. And a lot of people speculated that Bitcoin might not be able to increase in price, even in a high interest environment, but it does. And I believe it does because it's not only, but predominantly dependent on demand and supply. And the demand for Bitcoin grows for various reasons. And the supply of Bitcoin, since Bitcoin is inflationary, goes down over time. And we just had a halving. So Bitcoin works independent of central banks and their arbitrary decision, which also means if you run a real estate business and you want to deal with the headwinds that you are going to face in a high interest rate environment, including Bitcoin in your business can make your business more resilient and can allow you to act a little bit more independently of central bank decisions, because that is a very big headache that real estate investors have to deal with.
It's huge. It's absolutely huge. That's great. Thanks for that, Leon.
Yeah.
Sorry, go ahead.
Oh, I was just going to comment that there was a really good post by Lynn Alden recently, and I think this kind of helped clarify. She's been commenting on this for a little while, that actually in some cases you could think of it like the real money being made is actually in the fiat short, right? Like when you lever up, right? That's the typical thing that people are doing in property. It's that you're levering up to go, into this property, but you're also in a sense, you're going short the fiat currency. And when you think about it, if you put down 20% on a property, that's like a 5x leverage, short on fiat. And so in a sense, that's how a lot of property investors think it was down to their skill in property management and so on. And yes, I'm not going to deny there's obviously some skill associated with that, but actually a lot of the gain in some sense is coming just from being levered into property. So as Leon points out, that really the property appreciation rate or even the cap rate on many of these properties is not that great. No. But it's the fact of the leverage that's really driving the profitable outcome. And what we live in today in many parts of the Western world, it's normalized to have these cheap fiat credit loans. And only recently the rate has been coming up. And so, as I look at the UK, the Bank of England's current official bank rate is 5.25%. And so I'm going to guess, individuals and corporates who are paying a mortgage rate are paying just a little bit above that. Yeah. I mean, historically speaking, that's probably about the level it's been. Like if you look at, I think there's this book, it's like 5,000 years of interest rate history or something like this. And it's kind of in that range. That's probably about historically average. But it's just that we live under this fiat regime with massive leverage. And because that leverage is so readily available to everyday individuals, it's bid property markets to the moon. And that's what we're now seeing around these issues of affordability for younger people, younger generations.
That's well said, guys. Absolutely well said. Well, actually, that brings me on to my next question. Actually, if you look at the salary needed to buy a house in London, it's just shocking, absolutely shocking. The salary needs to buy a house in London, you're looking at a deposit of 133,418 on average, which is out of the remit of most young people these days. I mean, you can't buy anything, so which kind of alludes to the fact, we're probably going to go like, correct me if I'm wrong here, Leon, Germany's quite driven on rental market, right? As in most people will rent. And it seems to be that's going to be happening a lot. I mean, I've got friends who live in Dubai, actually, they just rent. And I said, they've been there, one of them's been there 10 years. I said, why don't you just buy? He goes, well, it's just cheap enough and I can move around. I've got that flexibility. I think that's what's going to be happening in the UK. But my question on this was actually more around what's your thoughts basically on this, and will it make the next generation choose Bitcoin as a better store of value and then end up renting property instead? So we're kind of a traverse. What's your thoughts, Stefan? Do you want to go first, or Leon?
Sure. Actually, yeah. So I mean, I think this is kind of instructive that there are people in the Bitcoin world who have been saying, yeah, hodl Bitcoin, rent everything else, right? Like it's kind of like the old, I know there's like an old finance saying, something like that. Like, you just rent everything, rent the other things while you kind of hold the asset that you think is going up. And so I think that's part of this is also affordability question, as you were saying. It's an affordability question in some of these big, let's say, global world cities like New York's and London's of the world. It's a very high renter ratio instead of property ownership ratio, because the prices have just been bid so high for various reasons, right? But I just think it's going to drive this generational divide, because there'll be all these young people who are sort of like, hey, I'm kind of locked out of the property market here. I can't afford to buy a place anywhere near where I grew up or anywhere near. Meanwhile, they're looking at the Gen X and Boomer generation who had a chance to buy property when it wasn't such crazy levels. And so it is driving a bit of a more sticky or tough conversation. And I think what we're going to see is people start to say, well, hang on, why should I, if you're a younger person, why should you pay into the Ponzi? And that when you're old, nobody young is going to pay into the Ponzi for you, right? Like the welfare Ponzi is not going to exist for my generation. And so I think it's going to drive, so it's like, why pay into it if you're not going to get it back? So I think that's going to drive a tougher conversation for people. And there'll be a lot of people who want to sort of dump their bag on you, right? They want to sell you their bag of, oh, hey, yeah, you should go into debt and buy this property, even though it's like well out of your reach. But, I think more and more people are going to realize, wait, I can just save with Bitcoin instead.
Also, you've got a lot of value locked away. You know, you're buying your first property and you're looking at thousands you've got to put down, right? So, you know, my view is if you rent and then put into Bitcoin, you're much more financially astute and secure, I guess, for the future, right?
Yeah, I think so.
So we got some good news that I heard. Do you know Dan Held? He's a big guy I always see popping up on LinkedIn. He was talking about Millennium Management, one of the largest largest hedge funds in the world, has bought $2 billion worth of Bitcoin ETFs, which I just thought was crazy. Absolutely, a lot of Bitcoin there, right? What's your views on this?
I'll answer that question. I just like to add a comment to what has been said before, and then I'll tie it into my answer to this question. So, two things. I think I totally agree. I can see it personally for myself. I rent. I don't own an apartment. I made the decision 2 years ago because I, at that point of time, had to make the decision. What do I want to do? Do I want to keep my savings, get a loan, buy property, or keep the savings in Bitcoin? And I decided I'll keep it in Bitcoin. And that is because I believe Bitcoin is the only true possession that I have. If I own the private keys to my Bitcoin, I have full control, full cryptographic control over these Bitcoin. If I take out a loan, which is based on credit, and I buy a property, I have a land registry entitled to my name, which is not very beneficial other than being able to take credit against real estate and then invest, because usually that's what people do. They don't necessarily, obviously, they don't buy real estate for the utility value. They buy it so they can take credit against it and then invest. But I think on a Bitcoin standard, the speculation that's happening in real estate, that's going to move over into Bitcoin entirely. Real estate is going to collapse to its utility value, but real estate is going to persist as a business. So if you want to provide a service to the market by giving living or production space, you receive rent in return. So that as a business model, that's going to prevail. But as a savings tool, I think there's no reason to invest in real estate since Bitcoin exists. That's my personal opinion. And because it's just this great, easily accessible and easy to manage store of value. And now answering your question regarding the ETFs, this is now something that large institutions are also experiencing. So the last large deal that we made was selling a real estate project that we did to a pension fund. That pension fund now does not invest in real estate anymore at all. They invest in bonds because they get a higher interest or they get a higher return on bonds. But eventually what they will understand, they get an even higher return on Bitcoin. So I think that Bitcoin does not only threaten the monetary premium that sits in real estate, but it's going to eat the monetary premium that all other assets, including bonds, which is debt, also cars, art, and other financial assets, have accumulated. So I think that we'll see sovereign nations and pension funds and so forth dabbing their feet into Bitcoin. Obviously, buying an ETF is what they can do because it's fully regulated. But I believe that owning Bitcoin, of course, is the better option for a private individual or a privately held company.
Fantastic, fantastic. And that kind of brings me on to my next question, which is using Bitcoin as a means for wealth building alongside traditional assets seems to be becoming more popular, which is what you kind of sort of stepped on there. Have you seen more uptake on your journey on this? Stephan, can I just pass this one to you? Obviously working for your business. In terms of business and consumer, is it like, are they both equal, or is one taking over sort of precedent than the other?
Oh, I wouldn't have the stats on exactly, the breakdown, individual versus business inside of Swan, but I can comment to the general trend. What I have seen, and, I've been around for a few years, I have seen the typical thing is people dip their toe, right? They take a small position and then eventually they're sort of comfortable with that, or even after they've been through a cycle, now it's gone up a bit. Now they're ready to, they're ready to put more in. And so as long as they don't rebalance back down, their position just has grown after a cycle or two. And then after a while, you just, people naturally start to go through these progression stages, right? So at the start, it's like, oh, it's a little speculative bet. I'm dipping my toe. Then it's like, okay, let me increase the position a bit more. Then it's like, no, this is my savings asset. And then eventually you're kind of like, Bitcoin is my unit of account. That's a typical progression for people. And so, people go through that at the pace that they're ready to.
Yeah. Yeah, interesting. Leon, you recently mentioned on I think it was a Preston Peace podcast about how Bitcoin is disrupting property like e-commerce, disrupted retail. Can you dive into why and how this is?
Yeah, I explain what I mean with it. So I believe that, or not I believe, but generally speaking, if I would have to tell you what the internet is, the internet was the digitalization of information. And if you had a retail store in the 90s, you'd be smart by opening up a website or an e-commerce store in order to sell your products to customers, right? So what is Bitcoin? Bitcoin is the digitalization of value. Real estate has become so valuable because it's used as a store of value. But now we have a superior store of value, which is Bitcoin. So I believe that the investment thesis around real estate will fundamentally change because Bitcoin as a superior store of value is a better option to store value, but also to send value, and it has better liquidity. There's a really interesting report by McKinsey. They released in 2021. They estimated that 67%, I think, of the net wealth of the world are stored in real estate, and it's a very bad use for that value because it's totally illiquid. And Bitcoin is much more liquid. For example, if I have 2 Bitcoin, I'd say I want to store 1.5 Bitcoin in a cold storage, and I open up a payment channel for the Lightning network with around 0.5 Bitcoin of liquidity. So the liquidity or the productivity that I stored now has use for the market. So I believe that Bitcoin as a store of value, it's not just superior to real estate, but it's also better for overall prosperity and the efficiency of the market. So for a real estate developer, that means that Bitcoin threatens your business model as much as e-commerce threatened the business model of a retail store in the 90s.
I think that's fantastic. It really grabbed me when I saw that podcast that you did. That really sort of resonated with me.
Thank you.
We homed in on multi-sig storage. Stephan, let's discuss this. When I speak to my sort of property investor colleagues, cold wallet kind of puts them off simply because of the hassle of holding the keys. And we kind of spoke about this and tapped on that earlier on. And just the general upkeep and management. It'll be great to get your take on multi-sig storage and a bit more information about how this helps sort of rest the minds of business owners when investing into Bitcoin, basically.
So there's a few stages that people normally go through, right? At the start, you treat it like a stock and you treat it like, oh, it's just on my stockbroking terminal and they're dealing with it for me. Then maybe the next level is, okay, let me play around with a phone wallet and just have a small amount there. Then, okay, let me get a hardware wallet, right? Like get a hardware device and start with that. And then once that amount starts to get larger, that's when you start thinking about, okay, I need to learn about multi-signature because now I'm removing single points of failure, right? It's not a matter of one device is getting pwned or one backup is getting stolen. No, now you would need to get multiple devices to actually get the coins. And then so for a business, that's where, of course, multi-signature is also really useful for distributing the control. Right, you might have multiple partners in the business and they may hold a key each or something like this. Or maybe the CEO has a key, the CFO has a key, and maybe you have a collaborative partner like Swan who holds the third key. That's another example. So I think there's a spectrum there and people are slowly learning over time. And of course, those of us who come from the Bitcoin world, we have this saying, not your keys, not your coins. And so you want to respect that ethos and hold your own keys. And so it's just a natural progression that I see. And it's something that we are now rolling out with Swan Vault as well. So we're progressively rolling that out to more customers over time. And so we're starting with some of our high net worth and Swan private customers and some of our business customers. So that's where that's at. But there's a range of options out there. Like if you want to, you can DIY. If you're not comfortable with that, use a provider, and that provider will have somebody who guides you along the process. And you have a concierge. So we actually have concierge setup staff who will help them, sit with them on a call, teach them how to set up in our case, it'll be some Blockstream Jades. So that's what is used currently in our Swan Vault program. And over time, there'll be support added for other kinds of hardware devices. But that's the current thinking.
That's interesting. And it's nice having that partnership, I guess, knowing that someone can kind of walk you through. It's not just you versus the machine or the website that you're talking
about. Yeah, exactly. And one other quick point I'll just make here is that with the collaborative custody model, you, the individual, or you, the business, can hold 2 of the 3 keys, and then Swan holds that 3rd key and also the underlying backup. So you need the output descriptor. It's kind of a technical term, but basically in this scenario, Swan holds that for you as well. And so, and of course, the idea is you can download it and store it for yourself, and you can, even if Swan were to somehow go away, you would still have control and be able to spend those coins and, be able to kind of recover your coins or spend them into another wallet. So it's an important, I guess, safety net for people that they don't feel like, oh, if I screw something up here, am I going to lose all my coins? Well, no, that's the reason we use multi-sig. It gives you this increased security and redundancy in terms of your setup.
Fantastic. As we get more people joining the party, as in the Bitcoin party, it's predicted, I keep reading, that the percentage year-on-year return for Bitcoin is going to be reducing. Do you think that's because it's becoming more mature, so more liquidity is coming in, people are trusting it, it's not seen as, I guess, a risky asset as it was, it's not speculative like it was? Couple that with the halving, and people have all these different thoughts. So, Leon, it'd be good to get your feedback on that. Are we going to be reducing the percentage returns? Are we going to have these crazy ups and downs, or is it just becoming mature like property, was back in the 30s, for example?
It's difficult to give a detailed answer to your question, but I think as the market cap of Bitcoin grows, it naturally can't grow as fast. I mean, that's just the nature of an asset that matures and has a higher market cap. But year on year, I read that over the past 4 years, it was either 60 or 69% year on year growth for Bitcoin. And that is still a lot. I know for the first 10 years, it was around 190 to 150% year on year growth, depending what day you choose. And that has come down a little bit because the market cap of Bitcoin has grown. But I do believe the volatility will stay. And I think it's good because the volatility is something that we can observe in nature. And it's something that makes nature more resilient. It is just that the volatility of our market has been forcefully taken out of the market by central banks injecting money in the market whenever the market experiences downward pressure, because it exposes the problem of the existing system. In Bitcoin, it's not possible to arbitrarily inflate the supply, which means that market participants have to test their business models in a very competitive marketplace. And I think that's a good thing because it helps the market to become more resilient over time. And also frauds, like, for example, SBF, they are being exposed at a much earlier rate. For example, somebody like Madoff that was able to roll out a Ponzi scheme over decades and decades because there was so much fresh currency available to be funneled into investments like his. That's not possible in Bitcoin. So I believe the volatility in Bitcoin will stay, and that's good. But we can already observe that the volatility is going down slightly over time as well. So that's going to continue. So it's going to be a little bit maybe in a funnel like that, but it's going to be over many decades, I believe.
Yeah. So do you think, both of you guys, do you think it's still going to, is Bitcoin still going to outperform most asset class? I guess give it a 10-year period, unless something new comes out. I know we haven't got a crystal ball. As of Bitcoin versus property versus gold versus any key asset.
I do expect Bitcoin to outperform gold, property, stocks, like all the typical other big asset classes. Bitcoin will outperform those. But I do also believe, it's going to be volatile, but at the same time, the CAGR is likely to taper down, right? So right now on a 10-year basis, CAGR is something like 60% per year. Now I think it'll still be high, but it's going to taper down, and if I had to guess, maybe 40 to 50% over the, let's say, medium term, and then post hyper Bitcoinization, we don't know what it'll be. Maybe it's 10%. I don't know. Maybe it's 5%. We don't know, but it will more closely track, let's say, the productivity of the economy. I would say is kind of a rough sort of estimate. But it's kind of, a lot of the early gains are obviously gone, right? Like, none of it, if only we could go back and get some coins from 2010. I mean, I wish, right? But ultimately, you sort of have to think about where we are now. What do you think in today's buying power terms, what could it sort of settle at? And actually, I in a recent podcast with Preston Pish, I was talking a bit about that idea, and we were sort of saying, well, if one Bitcoin is worth kind of like a mansion, like a really nice house, then in today's terms, maybe it's like something like, 5 to 10 million per Bitcoin in today's terms, that is. So maybe the actual fiat number will be much higher, or eventually infinite if it really does, fully hyperinflate. But if it kind of stays at that ish in that range, then, that might be a rough idea of what it kind of does. But of course, over time, the economy is going to get more productive. So, people will be able to buy more stuff just because humanity is more productive. We can just make more stuff for less.
Absolutely. That's interesting. It really is.
And,
I have to look up that podcast. Sorry, Leon, go ahead.
No, I didn't mean to interrupt you. Go ahead. I'll go after you.
No, please. I was just going to go on to another question, but please fill in.
Okay, just to add. So I also believe once, fiat currencies hyperinflate, things will need to be repriced in Bitcoin, and we won't price them. We won't say Bitcoin is worth X amount in fiat terms. We'll just say this good is worth X amount of Satoshi. And in that, if we are in that time, Bitcoin can also go down in value. Let's say there's a huge disaster, I don't know, like a tsunami that's taken out part of the world or something like that. We can also experience a time where Bitcoin is going to decrease in value, or if humanity is less productive, but that's very far out into the future.
I've had this conversation with so many people, entrepreneurs, and I said, you'll be pricing stuff in the future in Bitcoin. And they look at me like I'm absolutely crazy. But it's that mindset. It's just trying to understand. And they are investing, by the way, a lot of these people I speak with into Bitcoin, but not from a business level yet, oddly, but only from a personal level. It's almost like they want to get through the psyche of doing it personally, then building that trust up. Like you said, Stephan, earlier on, then I can work with a partner to actually now do my business and start, moving away from property, or adding on to my property portfolio with Bitcoin, basically. There was something interesting that came up. A video which is really interesting. I'm just going to play it quickly. Let me just share my screen. And it was basically, this is the most frightening clip, basically, I think you ever watched, or hopefully you will have done. You might have seen it. It's Jared Bernstein is the chair of the Council of the Economic Advisors, the main agency advising Biden on economic policy. It's very interesting. Let me just play it. Okay.
The U.S. government can't go bankrupt because we can print our own money.
It obviously begs the question, why exactly are we borrowing in a currency that we print ourselves? I'm waiting for someone to stand up and say, why do we borrow our own currency in the first place?
Like you said, they print the dollar. So why does the government even borrow?
Well, again, some of this stuff gets, some of the language that some of the language and concepts are just confusing. I mean, the government definitely prints money, and it definitely lends that money, which is why the government definitely prints money, and then it lends that money by selling bonds. Is that what they do?
I'll leave that one there, but that's basically how the video goes. I was dumbstruck when I saw it. I was like, wow, these are the sort of guys that we're sort of dealing with at sort of government level. What's your take on this?
Ultimately, it's like a little shell game, because I have a lot of disagreements with the MMT crew, right? The MMT people, let me put the criticism this way. They neglect the role of people choosing other money, right? They just sort of they sort of take it for granted that people choose US dollar to hold their bags in. And they don't sort of appropriately speak about the what would happen is if they really did just get what they wanted, which is more government control of resources, people would choose to hold less government bonds. People would choose to hold less US dollars. That's just that's the fundamental thing. At the end of the day, that's what's going to happen over time. And obviously MMT thought has become very popular amongst statists and people who want the state to be big, because it allows for that kind of thinking. So, you boil it all down, that's kind of what it is, right? Another way, let me frame it this way. People talk about this idea of, oh, hey, if they can print money, why do we pay taxes, right? Like, it's kind of like, people are asking this question, but there's a serious answer to it as well. You know why? Because it's a con game. It requires enough people have confidence in the debt bags of that government. As an example, hypothetically, imagine the government had zero taxation revenue and it only had bonds. So if you knew that, why would you now buy government bonds when you know the only way you're going to get paid back in the future with some return on that coupon on the bond is for more printing. So it's a con game, right? That's really what it is. They need a certain level of taxation revenue per se, or, you know, quotation marks, to be able to pay back people in the future, right? So the whole game is, oh, I'm the government, you know, here's buy my debt. I'm going to pay you back in 30 years by taxing my current citizens and taxpayers and residents, and I'm going to pay you back in 30 years based on what I've taxed out of them. But if I don't have any tax revenue, what's the only way I can pay you back? Printing more, right? So it is a con game.
Yeah, absolutely. Wow. Leon, you did a podcast recently. Well, I say recently, it was a short while ago, but basically it was talking about, it was basically with Jeff Booth. And it featured talking about why we own houses, not for the utility value, but because of our fiat money is becoming worth less and less. Let's just have a quick look at this. I've just put it at a timestamp here, which is quite an interesting point.
And accepted by financial banks.
We own more houses, not because of the utility value. We own more houses because our money is getting worth less and we're going to pay it back in cheaper nominal terms.
Home ownership.
Give me your view, Leon. What was that about then? Is this what you mentioned kind of earlier on? But it's really interesting to hear this. It's like, wow, people are just, the perception of the mindset's changing from property anyway, I think.
Yeah. So the comment that I made, I think, which then was picked up and included in this little documentary or the Hard Money Show, was a podcast called Digital Real Estate that I did with Robert Breedlove. And what I basically said is that Bitcoin is digital real estate, but I quickly explained why. It's just an analogy. Of course, Bitcoin is much better than real estate as a store of value. But what I said is that because fiat currency is being inflated, and as the money supply increases, individual monetary units lose purchasing power. That is a dynamic that is fundamental to the value of money, and it's something that Copernicus already proved 500 years ago, and the MNT crew still neglected. It's almost like neglecting that there's time or things like that. It's a fundamental axiom to our physical world that's being neglected. And it's also the reason why we have many of the problems in the world, because I think inflation drives many negative things in the economy, including poverty and war. But to answer your question is, so people need to invest in order to save their purchasing power. So they invest into real estate because real estate is scarce and it's easy to finance. And banks, they like to lend out money for people to buy real estate because they create that money. Then they charge interest on it, and that's a revenue stream for them. So banks usually sell their customers products that include buying real estate because they make money of it. And the utility value of real estate does not play a role here. So real estate has been priced away from its utility value to become a speculative object to outperform inflation and fiat currencies. But now we have Bitcoin, and Bitcoin is a better store of value, so I can buy Bitcoin by default. I don't need to invest in real estate. And I can also use the Bitcoin in order to receive credit, because even on a Bitcoin standard, it's worthwhile for an entrepreneur to get credit because savings are the ability to plan for the future. And if I want to start a business, maybe I have a family, it's not wise to invest all my savings into the business because that's going to create a lot of uncertainty in me managing not just my future, but also the future of my family. So Bitcoin is both a great store of value, near perfect in my opinion, and it's also pristine collateral for lending. So that's why it is in competition with real estate, which at this point in time is the number one store of value, number one form of collateral used in the world.
Leon, you just linked that perfectly to my next question. It's absolutely bang on. There was a big question I keep getting asked from property investors and developers, and that's like, I like the idea of Bitcoin, but how do I make cash flow out of the asset by using leverage? I know this is quite new, but could you kind of explain to the viewers, how can you leverage Bitcoin for the future? Again, and use the analogy comparing it to kind of property investment, if you don't mind.
Sure. I just want to make a comment. So also the idea of intrinsic value is fundamentally flawed. It's something that both Ricardo and Adam Smith thought, and also a lot of socialist economists think that. But there is no such thing as intrinsic value. Value is subjective. It's something that Karl Menger already proved in 1871. He released a book called Principles of Economics, in which he showed that things are as valuable as people are willing to pay. You can take a Rolex watch as a perfect example. Sure, it's made out of gold and possibly diamonds, which are scarce, and there's a lot of craftsmanship that goes into producing the Rolex, but the value of the Rolex is dependent on whatever people are willing to pay. The same applies for real estate. So I just want to make the point that real estate is not so valuable because of its cash flow or because of its utility value. There's no intrinsic value in real estate. It's so valuable because people have a demand for it. I just want to make that clear, because Bitcoin is going to create higher demand because it protects savings much better than real estate. So that's just the first part to the question. Now your second question is, how can Bitcoin be used as collateral to incur debt to, for example, funnel your business? It's very important for real estate investors to be able to lend, because real estate has become very capital intense, and it's going to continue because we live in an inflationary environment. And until we are living on a Bitcoin standard, at that point of time, it might change, but that's going to be a long time out. So now the question is, how can you sustain your real estate business, and how can you continuously borrow without putting too much leverage on your business? Because I think the whole mentality of having leverage on leverage is also very dangerous. It creates boom and bust cycles. That's also something that has been proven by the Austrian economist over 100 years ago. So I think it's also intelligent to take a little bit leverage out of your business, generally speaking. But if you do own Bitcoin in your business, as Bitcoin grows in value, which it does by design, you are able to have a capital base which you can lend against to maintain your properties or invest in new properties. Because that's basically why I believe that Bitcoin is pristine collateral that fits very well into the real estate business structure.
But in the UK, we haven't got the lending facilities yet. I mean, is it big in Germany or even Dubai where you can leverage Bitcoin yet?
I'd be happy to hear what Swan is probably more.
Yeah, so I don't have much to add from the Swan perspective. I know there is, so I will say there is Swan institutional, and there are some, let's say, some things that might be done at a larger institution level. But I think this market is still growing in terms of the market to borrow against your Bitcoin. Now, of course, there are some well-known providers. So a past sponsor of my show, Unchained Capital, does this in the US. But I believe it's not for individuals. I think they have it for businesses. There's Ledden from Canada. So they do this. There's Hodl Hodl Lend. There's Debify. And so these are some of the places where you can do this kind of use Bitcoin as collateral and borrow some fiat. But it is a relatively...
It's still so new though, isn't it? So
yeah, but it is a relatively new market. And I think that's why there are certain trade-offs around this. Right now, the interest rate that you'll pay on this is also higher than what you pay in the fiat system, right? Because arguably the fiat system is government subsidized. So the actual rate could be anywhere from 14 to 20% or even higher per year. And so there's not a huge amount of investments that will, make more than that. And so I think that's why it's still a young market for now. I think what will happen though over time is as the market starts to understand Bitcoin as a better collateral, I think those interest rates will come down. But part of the consideration here is think about it from the lender's perspective. If you were already a Bitcoiner, how much would you want to be holding fiat and lending that out so that somebody else could hold his Bitcoin?
That's a good point.
Right? It's like, why would you, if you're already a Bitcoiner, you'd rather just hold the Bitcoin, right? So that's kind of part of the difficulty here. Now, that said, that it's not that there's no hope here. I think there is hope here in terms of where the market develops. And I think this market will develop, and perhaps over the next cycle, we'll start to see some big moves. We may start to see big banks offer this kind of thing.
That's what we may start to see.
The banks we may see mergers and acquisitions, right? For all we know, maybe some big bank comes in and either buys one of these, lending against collateralized Bitcoin startups, or, who knows, the other way around, who knows? So there is an element there where it's just a young market. And so for that reason, the interest rates are higher. And of course, it will also vary on whether you are using a custodial solution or one of the types of solutions where you can still hold one of the keys and it's not being rehypothecated. So that's also another consideration. But
that's a good point.
I mean, I should warn, obvious disclaimers, right?
Yeah.
Look at what happened last cycle, right? You had FTX and BlockFi and all these people. I think we may, for all we know, we could see the same kind of thing happen again. And so that's where people have to be wary about, if you're going to do that kind of thing, you have to be wary about what % of your stack you're applying for this kind of thing, considering also the risks of, let's say, a drawdown. Because what happens, right, typically, once you've been through a few of these cycles, you you start to see the way people think about them differently, right? So there comes a point in the cycle where people start to think, oh, Bitcoin is not going down. Everyone just borrow against your coin. It's never going to draw down. And guess what?
We're there now, aren't we?
Yeah. And guess what happens next, right? So, obviously, there are professional companies who use debt, right? I'm not saying, have zero debt, but just be wary about this kind of thing, because it's not a free lunch. There are risks, and you have to sort of intelligently balance that.
I think that's well said. Absolutely. And we're still very, very new to the party here. Guys, I'm very cautious about time, and we're slightly overrunning. So I'm just going to kind of end on a couple of bits here. Mark Moss put a video out recently stating Fidelity's Bitcoin price prediction is 1 million by 2030, which we all probably keep hearing, where it's disrupting the store of values. Okay, I know this is all put out there, and I'm going to put it to you guys. What's your price prediction for December 24, but also December 2030?
I mean, I'll be honest with you, I don't really make price predictions because it's always wrong. But something that I generally think is an important date is November, December 2025. Because historically speaking, after the halving, let's say 18 months after, you usually had a peak, and then you had a large drawdown. And without making a price prediction, I just want to say that I believe we'll have a drawdown again, and people should be worried. Don't leverage up. Let's say you buy Bitcoin, Bitcoin goes up to 150,000. Don't lend against it aggressively. Maybe if you want to lend against it, maybe 5%, 10%, something like that. You need to be able to withstand an 80 or 90% drawdown. I think that's just important to keep in mind.
Well said. Stefan?
Yeah, I think Leon said it really well. I think there's a lot of people who get stuck into kind of ideas like, oh, super cycle, and there's not going to be a big drawdown. But as I was saying before, we are naturally herd animals. You would think we kind of rationally adopt things, but that's just not how it happens, right? People just run to things and then run out of them. And so, stack in a way that you can hodl for 4 years plus as a minimum, I would say. And so that means as well, if you're going to do this kind of loan thing, be very cautious and make sure it's like a small portion of your stack. Make sure you have, contingency planning in your mind. If, let's say you lost your job or something happens, that you're not like just totally dependent on the price not drawing down 80%, because it could happen, right? It's happened before. It could happen again. In terms of price predictions, I've commented, like, obviously I'm guessing, right? I don't have any real, what I think is likely.
Fine.
Yeah, if I had to guess, I could imagine, let's say, kind of like a mid 6-figure kind of price range, if I had to guess. But at the same time, I really don't know, right? So it could go that high, it could not, it could go higher. We don't really know. But for 2030, yeah, I think it'll probably be into the, probably over 500K by that point, right? But again, I anticipate that we'll have cycles on the way. So, trying to call them and time them, I don't really rate my my abilities there. So I'm more of a, play the long game. And it's not saying that you should never spend your coins. Like, I mean, of course, you have to we have to live if you're raising a family or whatever, but just be very judicious. Think of it like, if you are spending any large amount of your coins, just think of it like, am I okay with never getting this amount of coin back again? Because that could be the reality, right? So think of it like, if I, let's say it's, 2030, but you need to buy a house for your family or something like that. And you're kind of like, okay, I'm okay with, giving up this small portion of my stack to buy a house for my family in 2030, because, we plan to live in this home for a long period of time. That kind of, like, that's kind of how I would think about it, as opposed to trying to sort of time the cycle. I don't think I'm going to be successful doing that.
No. And as Raul Paul says, don't fuck this up. Don't leverage. I think that's the critical thing, especially on cycles like this. Guys, it's been a real pleasure having you on To Go Permissionless. We really, really do value your time, and it's been a pleasure having you both on. Some amazing discussion and content right there. If people want to get hold of you, how can they reach out to you? Stefan, do you want to go first?
Yeah, so just search Stephan Livera. You'll find my podcast. And of course, we have a lot of educational material over at swan.com.
Fantastic. Leon?
Yes, yeah, you can find me on Twitter at Leon Wankum, and I have a newsletter called the Bitcoin newsletter on Substack, where I write about Bitcoin and real estate mostly. Not only, I also write about ethics, philosophy, Austrian economics, but I share practical strategies to incorporate Bitcoin into your business structure, and you do with it as you choose.
I'm a subscriber. It's a fantastic read. So anyone who isn't a subscriber yet, please get involved with that as well. Guys, thank you so much. It's been a real pleasure, and sorry to eat into a bit of extra time there. I know you guys are super busy, but I shall let you go and have a fantastic day.
Thank you.
Thank you, guys.
Thanks, guys. All the best.